Hello and welcome to TA for Traders. I'm Nigel Croft and it's Thursday the 5th of October. In this short video I'm going to look at the charts on the S&P index in the States. Hit a new high last week. In fact, it's hit a new high for the last week every single day. Will the rally continue? Well, all the technical indicators still look good. There's solid upside momentum. The moving averages all look good. So it looks like the rally will continue. But the slight concern is the Bollinger Bands. We're hitting the upper boundary of the Bollinger Bands on the daily. We've done it for 3 days consecutively now. Some short-term consolidation will occur in this bull run. Let's look at those charts. So here we're starting with the weekly chart. So each candle represents 1 week's trade. And you can see that for the last 4 weeks we have gone to new highs. We did get support before the rally from the 20 week, which was very positive. We're seeing positive momentum from the RSI, that's at 73.35, and the MACD have now turned around and are looking positive as well. So there's no negative factors on this chart whatsoever. Marginally getting overextended away from the moving averages, that's all that can be said. On the daily, so here each candle represents 1 day. Again, the overall technical picture looks positive. We had a golden cross on the 20, crossing the 50-day moving average back on the 14th of September. After that, actually, the market consolidated for a week, but as the 20-day caught up, it then moved forward again. You can see that the RSI is consistently in its uptrend. We've reached a new high, so there's no non-confirmations coming through on the RSI. RSI presently at 77.15, and you can see that on the MACD the short term down here has gone back above the long term, which is again a good bullish indicator. Now for this chart today I've put on the Bollinger Bands, and you can see that the upper boundary, which is this purplish line here, we're bubbling up against the upper level of the Bollinger Band. Now the Bollinger Bands are quite narrow on the S&P at the moment because of the low volatility. A Bollinger Band, if you don't know, is it's 2 standard deviations away from what I've done in the middle as the 20 day. So it's 2 standard deviations away from the 20 day, but with the volatility being low, that means that the differential between the high and the upper and the lower boundary on the Bollinger is quite narrow. But that being said, we are at the upper boundary. That's a bullish sign, but what happens is that you'll get a few days, 3 to 4, 5 days bouncing on the upper boundary, and then we'll get a consolidation more to the middle of the range. And you can see this previously back in July we had 1, 2, 3, 4, 5 days, and then we consolidated. Back in June the same happened. Back in February you can see that there the Bollinger Bands were actually very narrow, so the fact that was a very bullish sign, and you did get more days on the upper band. And then you can see as the volatility came in, as the market moved strongly upwards, the Bollinger Band expanded. But where we are at the present time, I would suggest that another day or 2 on the up, if that occurs, would be the limit. And really one should expect some consolidation. Let these moving averages catch up. The moving averages are positive. The overall picture on the daily does remain positive. Moving on to the 4 hour. Here again everything seems positive. We had the golden cross on the 20 crossing the 50, which was on the 29th of September. It was a very positive movement around that time. We had the break up, let the moving averages catch up. You can see that the momentum just starting to wane a bit on the 4-hour chart as it's just drifting slightly down, still at a level that's indicative of positive momentum though, 72.32, and also you can see that the MACD are starting to roll. The short term is actually marginally below the longer term, but well above zero. So again, some signs that some short-term consolidation may be about to arrive. Looking at the support and resistance on the S&P, we're at an all-time high, so I haven't put any resistance levels in. In the support, 2531.69 is the 20 from the 4-hour. 2515.11 is the 50 from the 4-hour. And actually, I mean, the fact that the supports that I've put in are just from the 4-hour chart, which just shows you that we have moved away from the moving averages a bit too much, and they're the first supports on the 4-hour chart. Usually, that's very rare that you get that. Usually, you'll get the 20-day in there or a previous low from a previous consolidation, but there's been no previous consolidation, so those moving averages from the 4-hour are the first supports. Anyway, thanks for watching the video. The key takeaways from the video should be that technically it still remains positive on the S&P. However, we are hitting the upper Bollinger Band on the daily, so short-term consolidation would be healthy. But otherwise there's no negative technical indicators. Many thanks for watching this video. Please remember that these videos are for information only and are my opinions, and they're not meant as an investment recommendation. Please read the disclaimer.